I think at the outset, have a strategy for your asset allocation.
What's the number one secret to wise asset allocation?
Honestly, it's having one. Most people don't have one. So I think when we kind of look at most of the investors out there, they're normally in paper investment products, stocks, bonds, ETFs, mutual funds, the normal stuff that's publicly traded on Wall Street. My request of people is, do you actually have a wiser asset allocation? We make money from private and public company stock, and then you actually invested in real estate and other assets to actually keep, retain, and grow that wealth. So I think at the outset, have a strategy for your asset allocation and decide, yes, keep some stuff liquid in the stock markets, but then actually choose real estate and farmland and other real hard assets to have that wiser asset allocation strategy.
Okay, I love it. So my background is commercial real estate, right? And that's been like I grew up in the business with my parents and rentals and cash flow and development in the Bay Area. Then I went to Marcus and Millichap, fell in love with like multifamily on a big scale. And I love that your background was Wall Street, right? And the idea of diversification and over concentrating and making sure that you have enough liquidity, as well as the ability to, like I say, go collect the rent, right? Or a place that someone's living in, or maybe it's in the farmland industry, be able to grow crops and do different business. So talk about the difference between traditional Wall Street asset allocation and what you've come to help people at Farmfolio.
Yeah, so I think you kind of have to break up the area of Wall Street that's serving you, because honestly, there's the general population that just gets the ability to go to your kind of discount broker and buy you ETFs and mutual funds. You're not being served at all. Those with high net worth, 3, 5 million plus, they get a lot more strategies that the common people like us have never gotten before. So in reality, for everyday people, it's like the classic, the 60-40 equities versus bond story died 20 years ago. 60% equity, 40% bonds. When the stock market crashes, the bonds keep your wealth intact. That is all rubbish and outdated. So honestly, people are just told to have 80-90% equities, hold for the long term. And even when it dips 30, 40, 50% in one of the major crashes, just hold on with your bare knuckles. Don't sell out of it, and it'll come back and recover. That's really what we're told, isn't it? Over and over again from Wall Street marketing.
Right. And then what we're seeing right now is, inflation and sitting in the bank, it's just, it's like your money's just burning out, the side of your window here. And so holding and owning large assets, right? Commercial real estate and farmland, different things like these things that are perhaps more tangible, right?